Everyone you talk to seems to have an opinion on what's going to happen to the property market over the year. On an individual level, most of these should be taken with a grain of salt. However, en masse, these opinions can be extremely valuable. After all, consumer confidence, or lack thereof, is what underpins market behaviour. So, what are the masses saying about 2022?
Welcome to The Elephant in the Room. This is the podcast where we love to talk about the big things in property that never usually get talked about. I'm Veronica Morgan, real estate agent, buyer's agent, co-host of Foxtel's Location Australia, and author of Auction Ready.
And I'm Chris Bates, mortgage broker. Before we get started, I need to let you know that nothing we say on here can be taken as personal advice. We always recommend you engage the services of a professional.
Don't forget that you can access the transcript for this episode on the website, as well as download our free full or forecaster report, Which Experts Can You Trust to Get It Right? theelephantintheroom.com.au.
In 2020, REBAA, that's the Real Estate Buyers Agents Association of Australia, joined forces with Property Talk Australia to launch their first Buyer Barometer Survey, which unsurprisingly in hindsight showed that the vast majority of Australian home buyers and investors were undeterred by the events of 2020 and forged ahead with their property investment plans despite COVID-19. Now, recently, they've just released the results of their second survey, and I've asked REBAA President Cate Bakos to join us and share with us the findings. What clues will it contain about the year ahead? Thank you for joining us today, Cate.
It's always a pleasure, and this one is quite dear to my heart. We've put a lot of work into it and we had a lot of support, a really broad community, so I'm thrilled to be on the show.
Well, that's brilliant. And look, before we launch into the survey results, can you sort of give us a quick overview about how the survey was conducted, how many participants? So I guess how statistically significant are these results?
Yeah, absolutely. We had a little bit of a conversation with the guys that run PTA, guys and girls, and they were really keen to combine forces and to see what we could tease out of what's already an extraordinarily large community. So PTA have over 13,000 members, and anyone who's familiar with this Facebook group will understand what sort of information sharing and conversations go on within the group. And they're all very dedicated, either property buyers, investors, or they're watching the property market and they're obviously keen to all share their knowledge. So we had the reach out, and obviously tapping into REBAA allowed us to combine forces and to craft some questions that we thought would be really relevant. And then we could present our findings and obviously go out to the media as well and be able to share some of this information about the Australian property market. So that's how it began. And some of our members have been able to share the survey link with their clients. But broadly, I think PTA did a lot of the heavy lifting in terms of how many respondents we had. We were aiming for over 1,000 and we didn't quite get there on 2 consecutive years. And I think part of that is probably around when you run the survey. Last time we were hovering over the Christmas period thinking maybe we could catch respondents during the holiday time when they've got a bit more free time. And this year we thought we'd press on before Christmas struck, and obviously, people are very busy at the moment. So next time round we'll be aiming for even more than 1,000 people, but so far we've got a really good breadth of information, and I think what was really telling was just how compelling some of the answers are, and maybe not necessarily answers that we're expecting.
So what were some of the, I guess, more surprising findings then?
People were, as you said in the intro, quite undeterred. And I think when we look at how jittery the market got leading into the federal election in 2019, and then how many people panicked when COVID hit our shores, and then the series of lockdowns, we've heard a lot in the media, and you read a lot about people that put all of their plans on hold and get really nervous about market downturns. And what was interesting with this contingent is that wasn't really the case. And I think it's fair to describe the community on PTA, and I think acknowledging that they're not just, your average Joe when it comes to someone out there with half an opinion on property. They're people who are generally pretty engaged with talking to property professionals and sharing knowledge, and they're thinking and feeling property every day. And a lot of them are wanting to be quite informed. So we're dealing with a different, contingent for this survey than if you just walked out onto the street and asked people what they thought. These people don't necessarily get all of their information on Today Tonight. So it would be fair to, call them a bit more of a sophisticated contingent. And if you are aware of the market forces and the drivers and the threats to your investment strategy, you'll obviously have, a reasonably good plan in place, and you'll be able to weigh up the risks accordingly. And what really shone through with this group was they didn't get the marketers like we've seen in the media or heard about when people have been responding to, to difficult challenges.
Interesting you say that, because I know that, look, I'm a member of REBAA, but and at first I thought, oh, look, this is not going to be great if it just has the respondents being, clients of buyers agents, for instance. They're going to look at the world a bit differently to somebody who does it themselves. And I'm not actually a member of Property Talk Australia group myself. I'm a member of a number of other ones, and I guess I'm making an assumption that the sort of makeup is often quite similar. People that are interested in property, they're still quite wide-ranging opinions, and they will, you've got people ranging from the full-on DIY right through to people who will use a buyer's agent and want to be more informed when they use a buyer's agent. And I think that needs to be a growing cohort in my view. So in a way, it's not really the people on the street, and yet the people on this, and I guess the big question is, are the people on the street more important, in the sense that the more of a knee-jerking in response to the headlines that you'll see on the news, in the newspapers and on the news bulletins? Are they more important as a cohort to understand, or is it that they're not as active anyway, and so therefore that doesn't really matter? Are we looking therefore at a more active cohort? I don't know the answer to that. I'm just sort of chucking it out there for discussion. It's a great
one to ponder. Yeah, I love the question itself, because I think everyone is, the overarching point that I would make is, if we could profile everyone, I would have loved to have, a census effort. But it was really great to get a broader than just buyer's agent clients kind of response, because when we look at the PTA participants, we've got first home buyers, we've got people who haven't done anything yet, they're just interested in learning more about property, we've got lots of DIYs, we've got sophisticated investors, and interestingly, we've got a really varied age group. We've got an enormous spread. So Facebook, it definitely cuts down the limitations of, geographical distance, because you can all get on Facebook, whether you're, at the northern tip of Queensland or whether you're in outback, whatever. And we've been able to get an enormous array of respondents that are in regional towns, capital cities, and it's really captured such a wide breadth. So I think there was a lot of value in that.
Interesting. So just before we sort of get into the specific things that might point to where things may head in 2022, are there any key differences in the results from a year ago?
Yes, we saw the regions emerging, and also Queensland is definitely featuring on the map for where people are either investing or buying or planning to invest or planning to buy. And that's not a great surprise, because we've now looked at the data. But what's really interesting is we were able to put this survey out quite some time ago, and it's really been a little bit of an indicator or predictor. And it just goes to show the power of lockdowns and states that people see opportunity in to invest in. That was quite telling. What was also telling was people that were impacted by things like rental eviction moratoriums. We heard a lot about this in the news, but it was a very surprisingly low figure of people who were actually impacted by that. And I think it goes to show that, bad news sells.
That is interesting. We'll get to the rental side of things a little further on. But so you're basically saying that Queensland's the most desirable property location for 2022. Is there a breakdown of, and what makes me laugh when you look at the actual, ABS data, for instance, it's Brisbane and rest of Queensland. Yes. Queensland's a very big state.
Yes.
Was there anything more specific than just Queensland? Was there sort of a Brisbane versus regional, or, is there more insights into that?
Yes, we did. We split some of our questions to try and get a bit of a gauge as to whether people would pursue the regions as well. And of course, the regions have outperformed for 2021, and a lot of people will look at that and think, great, let's jump onto that bus, because it's going the hardest, and it's not meant to be like that. We've had an exceptional year, but I didn't segment the question around Brisbane versus the rest of regional Queensland. And the challenge with any survey is keeping it to 2 minutes as opposed to 30 minutes. But certainly Queensland and the regions were very much front and centre, and that's no surprise at all. And a lot of people, you and I both know this, if something goes really well, everyone wants to jump on the horse that's winning the race. And I think that when it comes to property investing, diversification and understanding the drivers is the most critical thing.
Yeah, and that's a good point that you make there, because unfortunately a lot of people do pile in, and which then becomes a self-fulfilling prophecy. Prices rise because everyone's going, yeah, prices are rising, let's pile in there, therefore prices rise, until they don't anymore. Now, what is driving that? I mean, affordability, work from home, I presume all of these things are underpinning that attention towards Queensland. How would you say the survey what light did the survey results shine on that?
Look, it showed that 38% of all buyers looking to make a purchase decision were focusing on Queensland, which is a really big spread. And we can only assume that would be led by, obviously, the growth that the region and the city is delivering, but also freedoms associated with limited lockdowns and the work from home phenomenon. So that certainly came into play in this survey as well. Working conditions dictating property decisions. 40% of people said that current working conditions definitely influence their buying decisions. So, it was pretty crystal clear that the ability to work from home is a big driver in people's confidence in an area, whether they're going there for themselves to live or whether they're making an investment decision.
And is there any difference from now to a year ago with regards to that, or is it pretty constant?
No, there is a bit of a difference, but we did mix up our questions quite a bit because we wanted to focus on the impact that COVID has had on the way that we think about property and our property investment strategies. And obviously we didn't really focus on it so much last year, but this time round, it definitely highlighted that it has impacted people's plans to invest and also where they're choosing to live.
Now, a lot of surveys that are out there are particularly directed towards investors rather than owner-occupiers. And I know this survey sort of looked at both sides of it. Was there any differences in there that you could detect? The owner-occupier mentality versus the investor mentality?
What we did find is people's feeling around boom conditions. That was certainly a common theme. Almost half thought that the boom conditions would continue into 2022, and a lot of people felt that they might have been priced out of the market. So 64% said that they had been priced out of the areas they planned to buy in, and that's a really telling statistic.
And did the survey sort of go into if you feel priced out, what is your response? So what's the next step for them?
What we did go into is where would you like to focus your next move, which was when we teased out regions and Queensland. That was quite a compelling stat. But unfortunately, with the breadth of intention, so owner-occupier, upgrader, downsizer, first home buyer, and you've got your rent-vestors and your investors, we couldn't really get into every single category and then ask them to detail exactly what their next move was. But we tried to keep it as general as we could to eke out some of these responses and understand whether attitudes had changed in response to COVID and to lockdowns.
Because confidence about the market and the way it performs is a double-edged sword, isn't it? I mean, it can simultaneously drive both FOMO in some and also complete inaction in others. For some people who feel that they're priced out, that might they might respond by going getting more money or moving to a different area or doubling down or just buying the next thing that they find. That FOMO drives pretty crazy decisions. And others might just dig their heels in and go, that's it, I'm going to bunker down and wait until this is all over. They may be rewarded, but the odds are against them, timing that bunkering down. Is there any particular way you can measure how people are reacting to the heat in the market?
Yes, if their intention is still to buy or if they're still actively looking, that is quite telling. I think what I was expecting to see across this group was maybe some contrarian investing attitudes either being talked about or pursued, but we didn't see any of that. I didn't get a sense for people wanting to return to the city yet, and maybe we asked the questions too early, because I'm seeing now in my day-to-day travels with prospects and clients, the city is holding a lot of appeal for people, and I've even had some contrarian people talk to me about coming back to the CBD. So at the time of the survey, I think that lockdown was probably still a really raw wound and certainly people's willingness to move further out or to head north was what was more obvious.
Well, I guess you're in Melbourne, I'm in Sydney. I mean, we're both experienced lockdowns, you guys more than us. Whereas other states, like you mentioned, Queensland's had bugger all, right? They've been locked down from the rest. They're locked down from the rest of the country, but then they're not locked down in their own homes. And so I would imagine that, and given that you've got quite a geographic spread on the respondents to this survey, that there's, the concentrations of the impact on lockdown may vary. It is rather, I think what you mentioned earlier about the rental impact is rather interesting because, like you say, that headlines, negative headlines actually sell news and sell advertising, of course. And there was a lot of talk about rental moratoriums and the impact on investors, et cetera, et cetera, et cetera.
Yeah.
But the results were a bit surprising here, weren't they?
Very. Yeah. I remember when COVID first really bit and then we went into lockdown, for me personally, my phone did not stop ringing the minute that the rental eviction moratorium was announced. I had lots of past clients, fresh past clients, wondering how it would impact them. We don't want this in our backyard, and understandable. I've got a portfolio. I was a little bit stressed about the idea of tenants deciding not to pay and me having no recourse. We've all got mortgages to pay. And it was surprising. I had this deluge of calls and just thought, oh my gosh, who would want to be a property manager right now? And I found that very few of our clients were actually impacted. And me personally, I was almost not impacted. We had one tenant who wanted a bit of a decrease, and probably the tenant that didn't need it. But it wasn't something that bit. And once we got over that horrible deluge of inquiries and fearful people, it really did calm down. And I know that for landlords who own commercial property, particularly retail space, it would have been brutal. But for residential property investors, I didn't hear very much about it in my own backyard and with our past clients. And so this survey result, considering how much the headlines were amplified and these fearful news articles were impacting us then and making us all feel quite nervous, the survey results are definitely in line with my own personal experience and reflection of what actually happened.
And so what did actually happen? How was it? Well, I guess what does the survey tell us?
Well, the survey says that only 8% of our participants were impacted by rental eviction moratoriums. Now, they could have been tenants, they could have been landlords, and 79% of participants were not impacted. So the remaining percentage there were presumably owner-occupiers without investment property. So they weren't renters, they weren't landlords, they weren't impacted at all. But that's a pretty tiny number when you consider that a lot of this community are active investors. Only 8% were impacted. And we didn't gauge the impact, whether it was full loss of rent or whether it was negotiating a smaller amount or offering a short-term discount with the balance to be repaid. I mean, they were typically the ways that we resolved things with tenants who were in distress. And considering how significant the headlines were, I just thought that was a very small number.
It is actually a very small number. Me personally, I was impacted in 2 properties that I've had to reduce the rent. And I think the thing is that, I certainly personally had the approach at the beginning of lockdowns in 2020 in March. And I thought, look, if we all pull our belts in a little bit, we'll all get through this. And, and so I guess, yeah, so I guess I've lived and done what I said I felt was fair at the time. So I'm quite happy with that. And and I think the actual, it's interesting how things have unfolded, because there have been certain segments of our population that have been more impacted than others. There's no doubt about that. But I know there was a lot of rush legislation through in every state because, of course, property legislation is state-based. And there was a lot of fear and a lot of confusion, and there were daily updates from REI New South Wales, and I imagine the REIV was the same. And, trying to interpret the mandates, and then that was then translated into legislation. And I wouldn't have wanted to be a property manager at that time either. So it is interesting to see in the wash of it all that only 8% of these respondents have actually, and you would assume active in this market, were impacted. And given that the impact could be as little as, a very small concession versus, whole periods of rent-free.
If you like what you're hearing here, please share this episode with others you feel would benefit. And while you're at it, why not leave us an iTunes review? 5 stars, please. Every review helps make it easier for other people to find us and hear what our amazing guests have to say. We love hearing your questions, and we're planning more listener Q&A episodes. Please send your questions in. You can send them via the website, which is theelephantintheroom.com.au, or directly via email to questions@theelephantintheroom.com.au.
Now, the other really interesting stat was around expectations for rental movement. So what we have seen through all of this is rents have really tightened around the country. It's pretty awful, and I think we've got
except inner Sydney and inner Melbourne, except for that.
That's right. Yes. Well, interestingly, I look at the CoreLogic figures every month, and I'm just perplexed because we've got such an oversupply of rubbish one-bedroom units in Melbourne. And when we got to the worst point of all of this, I think our rents for units were down 13%. You can just imagine in the middle of Melbourne, they're probably down like 50% because we're just talking about a median figure. But I've watched that tighten now, and our unit market in Melbourne is now in positive territory, which means that rents have just started to climb, indicating that our vacancy has reached equilibrium. And we've had no new arrivals, and I would consider that one-bedders aren't all that exciting for people to want to rent or buy, but our extreme stock shortage has seen a lot of desperate buyers turning to this type of stock. So we've reduced our available rentals because landlords have thought, ripper, I'll offload this thing, and buyers have come along and bought them. And so what it's really done is underpinned a tighter vacancy rate. So across the board now, for the first time since all of this struck, all of our states and territories, both capital city and regional markets, are experiencing rental shortage and tighter vacancies. And we do have a bit of a crisis on our hands because in certain markets it's really tough to get a rental, and we've seen rents climb by over 30% in 1 year in some of our markets, which is really horrendous for any tenant who's having to navigate that.
Well, that's more of particularly in regional areas. There's very well publicised pressures on rentals and very extremely low vacancy rates and rents going up, and real pressure and on the original local population, not the new local population, and anecdotally, I'm hearing a lot of stories regionally about people, investors buying properties and not putting them into the rental pool. They're actually buying them for Airbnb style market. So they've got an increased return, but, obviously that decreases the rental stock available in a lot of areas, particularly those sort of holiday areas.
Yes.
Does the survey go into why people think rents might go up?
No, it doesn't. What we did get, though, was a measure on how many expect a decrease, how many expect an increase, and then how many think it will stay the same. And I was a little bit surprised by this one because I think it's a fair call to suggest that rents will just go up across the board based on those economic indicators that we get each month. But 2% expect rents to decrease. And I did wonder to myself, are these people perhaps that own underperforming assets in capital cities? Because they've been sustaining rental decreases over the last few years anyway, or are they just optimists about their position on the property ladder as landlords, and maybe I don't know, I couldn't work that one out. 69% expect an increase in rent, and 30% expect rents to stay the same. So that was interesting. I've got a different outlook for rents. I'm seeing them moving across the board at the moment.
Interesting enough, though, rents take a while to move, because people sign a lease, and typically that might be a 12-month lease, and that rent isn't going to go up for 12 months, and it may not go up if they stay there either. And so it's a long, much slower burn than, say, property prices. Property prices can start increasing or decreasing very, very quickly. But the rental market is a lot more difficult to predict and well, when I say predict, actually, anyone who reads our Full Forecaster report will know you can't predict anything with any accuracy. But certainly in terms of reading trends or whatever, I mean, it's the sale market is a lot more responsive to whatever's going on, whereas the property market has that delayed response. And I guess is what I'm trying to say there. So it's interesting to see that intention. But I guess there are different forces rather than confidence that's going to drive rents up or down. Whereas sale prices is much more determinant on confidence, right?
Yes, very much so. I think when we do look at how COVID has contributed to rental issues for tenants, so for tighter vacancy rates and hiked up rents, obviously the movement to the regions is really hard, because when you consider, we've got 10,000 people leaving Sydney or leaving Melbourne, doesn't really impact Sydney or Melbourne. When you get 10,000 people arriving in Bendigo, that has a massive impact on Bendigo. So we can segment some of these areas and look at them and think, well, we've got a deluge of people moving there because they're escaping lockdown or wanting life in the seaside or the country. We're also, as you alluded to, seeing people having two homes, and COVID created a lot of that. We saw people going and buying a holiday house, and if you're wanting it for personal use and you're trying to convince yourself that it's a great investment, typically you'll be there when it's when everyone else wants to be there. So you'll be in your own home, compromising your own ability to get the best rental you could if it's a seasonality sort of holiday hotspot. But we certainly saw a lot of rental stock taken off the market because people earmarked them as their holiday house and then left their city pad vacant. So that's created a bit of an issue too. And of course, where we're seeing some of the toughest rental increases is in the markets that have been hit by, as they call us, southerners or anyone, escaping the city.
Mexicans.
Yes.
I do find it quite remarkable, humorous, weird that you anecdotally, I've been hearing this, interviewing so many people about this whole sea change, tree change thing for a long time, but obviously it's been accelerated through lockdowns. And the idea that people would go and buy a second house rather than go skiing in Aspen, I can't have a holiday overseas, so therefore I'm going to buy a house. And it seems ridiculous, and yet it appears that it's not as ridiculous as it might sound. And when I say it seems ridiculous, it's like, why would you base a property decision? Because, for a little while we might not be able to take an overseas holiday. I mean, it does smack of first world privilege, but it also is an interesting knee jerk. It's like, do we need our holidays that desperately?
I totally agree with you. I had an interview with Chris not long ago, and you're Chris Bates, and he and I had the same approach when it comes to weighing up the feasibility of buying a holiday house. You've got to run the cost benefit analysis, and you've got to look at the benefit that you get in just hiring an Airbnb however many times a year you might want to do it, or mixing it up, going to all different kinds of places, and putting that money that you would have spent on a holiday house into an investment property that has well considered growth drivers and has actually been thought out for non-emotional reasons. Or do you want to buy that that block of land or that little place that's 2 hours away that you've got to go down and mow the lawn and pay all the rates on, and argue with your kids about all of that, and who's going to clean it up, who puts the bins out. I mean, I thought it was a great conversation, and I still maintain it, but You know what? I was outvoted big time in 2020 and 2021 because I even had past clients returning saying, "Can you help us buy our little piece of paradise?" And you know what? It didn't matter what logic I gave them. It was a really burning desire for a lot of people, and that emotional need to have something that they could escape to. It just overruled all other considerations.
And I think that's at the heart of it. It's a highly emotional decision. And, the elephant in the room is all about the subconscious mind driving our decisions. You might think that the rational mind's in charge, but generally speaking, it isn't. And look, interestingly enough, I have had a weekender. I don't have it anymore. The reasons I don't have it is convoluted and long and not for the purposes of this particular episode. Maybe I'll do a story on it one day. And I sold it. Obviously, I didn't have it available to me. And at the beginning of lockdown, I thought to myself, I'm glad I don't have that property anymore. And then, sort of towards Christmas last year, heading into 2020 Christmas, I was thinking, oh, God, I wish I still had it. It'd be nice to
now that it's tripled in price.
Yeah, that too. And who would have seen that on the horizon? Absolutely not. But it's just an interesting. I've had the highs and lows of having a weekender, and I get the emotional pull. I do, and I also get the rational side of things. Is that you are tied to one place, and life is too short to be tied to one place, really. But it's very convenient just to rock up and have everything there ready to go. There's no doubt about it. But it's a privilege. But then when you get into this argument around regional locations that are really hard hit in terms of availability of property for the locals, and I think that there's a bit of a sociological aspect to this conversation that I think needs a little bit more attention. I think that that whole, if we are privileged enough to be able to afford one, we may need to just take a moment to think about people who are impacted by that decision. But anyway, that might just be me on a bandwagon. I think when you look at the South Coast in New South Wales in particular, these guys, they had those absolutely ravaging bushfires. There are people 2 years down the track that are still living in caravans and sheds on their properties with outdoor showers, that relief money hasn't made its way through, insurance money hasn't made its way through, I think that we have to remember that there are locals that are highly displaced, I think. Anyway, let's, may not go down.
It's a tragic thought, and I think it would weigh on a lot of people's consciences. So it's well deserving of a mention.
Well, not only that though, but here's the thing too, and I think what a lot of people may not realise when they're moving into these areas is that if you're moving into a regional area where the locals are actually building a level of resentment towards you, then I think that's something to just be aware of for your own comfort and enjoyment as well. But anyway, that's a side issue. Now, are there any other aspects of this survey, back to why we're having this conversation about this sort of buyer barometer looking into 2022, any other aspects that we need to tease out here?
Yeah, this one, maybe it might have been the same response pre-COVID, but I thought it was an interesting stat, and it's the last little headline I've got to share with you. When it comes to buying a property sight unseen.
Oh.
Now, we heard a lot about this, particularly in Melbourne when we were in the middle of lockdown. The difference between Sydney's lockdown and Melbourne's lockdown in the world of property was that we couldn't go into a property at all. So your trading conditions, albeit challenging, were still upheld, because in Sydney you could arrange to go and see a property one-on-one, and in Melbourne we didn't have that. And for a period of just slightly under 3 months we couldn't see properties. And so that sense of wanting to buy and beat the market, or FOMO, it was very evident, because we were being asked by a lot of clients and new prospects to help them buy something sight unseen, and it's a big risk. It's a dangerous business, and it's very hard to be able to do it with confidence, even with trusted people, because what one person sees another one might not. So if you're relying on videos or building inspectors or whatever, we saw a fair amount of that, and there was a lot of conversation about it. Now, 50% of the respondents said that they would definitively not buy a property sight unseen, and 19% said that they would do so without a qualified professional representing them. So the remaining percentage would obviously be prepared to buy sight unseen if they had a qualified property professional representing them. That might be a buyer's agent, or it might be a property manager they trust, or whoever. But 50% saying they'd definitively not buy a property. That's a really strong figure. But 19%, so 1/5, would buy without a qualified professional representing them. I think that's a scary statistic.
That's alarming. I mean, anecdotally, I heard many stories of people, like you said, trying to beat the market, knowing, particularly after the second lockdown, knowing what happened after the first lockdown. People think, well, there's going to be a surge of prices. Let's get on the bandwagon here. My personal feeling is, if anyone thinks that it's okay to buy sight unseen, it's because they haven't been burnt. They haven't actually seen what could go wrong, and then maybe they might change their thinking. I'm actually alarmed, and it's a sort of a side issue here. And I haven't sort of talked to you about this. I don't think we've discussed this. Fly in, fly out buyers agents. That the borderless buyers agent that doesn't actually reside or is not a local specialist in the area in which they buy, and through COVID, through lockdown, haven't been able to do their fly in, fly out, activity. And for anyone listening to this who hasn't sort of heard of this concept, it's very data-driven buyers agents who decide that certain areas are great to invest in. Then they basically put together a position or a pitch on a location, and they sell that into all their clients. Then they go and buy up an area, and then obviously they end up pushing prices up, and it's self-fulfilling prophecy. And a lot of the local buyers agents in these areas are often scratching their heads, and the sales agents, for that matter, are rubbing their hands together in glee, because they're thinking, yeehaw, we're actually getting some great transactions from people who don't know good from bad. And so this is a real danger for the clients of this type of buyer's agent. And they were curtailed through this period, and so they weren't even able to inspect. And I know that some of them don't inspect in good times. They don't inspect when borders are open. But, so then you've got buyers agents, supposedly experts, that are relying on, I don't know, what are they relying on in order to advise their clients? I mean, some I know have just sent local property managers in. I've heard some terrible stories.
It's a really interesting one, because data-driven research, there's such a place for it. And I know quite a few property professionals that just do it so brilliantly. But, the importance of having walked the pavement and knowing the A-grade streets and identifying where there's troublesome properties, I think that's really vital. And so, I'm definitely, I'm a locally based buyer's agent. There's lots of different ways that people do it. But I think, for anybody who is reliant on a non-local buyer's agent, they've got to be confident that buyer's agent is very familiar with the area that they're promoting, and obviously the growth drivers are articulated well, and the person who is inspecting the property has to be completely aligned to that business and know what they're looking for. And there are a lot of people out there that are doing borderless investing models, and I think it's really important to ask the right questions to have confidence in your BA before you just sign away a fee for someone going into another state.
Yeah, so then if you've got 19% of people who are quite happy to buy without, looking at property, it just beggars belief, doesn't it?
Yeah. It was particularly surprising with this group. And I thought to myself, is the number of, sophisticated or experienced investors swaying this risk profile to the riskier end of the spectrum because they've got confidence, or is that a number that is less than the general public, and they're more cautious? I don't know.
Yeah, it'd be interesting to tease that one out. But also, could it be FOMO? Could it be purely that oh my God, I missed out on growth, and so therefore I'll do it because, and it is very short-term thinking, and obviously, coaching people to think long-term, because once you're in it, it's like a bad marriage, it's not easy to get out of.
Well, what is interesting about this is we obviously did see price growth just, take off when we reopened, and particularly for Melbourne, we had a lot of stop-start with our lockdowns. We had 6 lockdowns. So by the time number 6 rolled around, we'd already experienced, 5 times over what happens when the market reopens, and it sort of takes off again, it leapfrogs. And so a lot of people were looking at the past and looking into the future and saying, well, I don't want to miss out again. Let's just buy during lockdown. And it was FOMO initiated, and it was people wanting to beat the herd. When the gates open and everyone gallops out, I want to be the horse in front. And so a lot of people did that. And the thing about a FOMO market is buyers are less fussy about the quality of the asset. And it's all well and good to think that if you buy something that's B grade and 10% property growth later, you could sell it for a little profit. You can get away with that if you time your sale right. It's a lot of wasted opportunity in my mind. But if you get it wrong and you buy at the peak and you've bought a B grade property and then the FOMO disappears and the market stabilises, it's a harder property to sell, and you probably will sustain a loss. So there's a lot of risk in that approach.
Yes, it is interesting stuff, isn't it? And I do see the same thing. And then I certainly to coach our clients to say, look, you in a hot market, you're going to pay a premium, doesn't matter what you buy. So make sure it's on A grade property. Don't be paying a premium on a B or a C grade property. And so therefore that sort of takes that I don't know, you just said, gives you a different lens to look at it. Recently, and this is just some research I'm doing at the moment, I was looking at the difference between paying sort of 5 or 10% over market, if you like, for an A grade property, and how that sort of stretches out over 10, 20 years if you compare it to, say, paying market value for a B or C grade property, right? And obviously looking at B and C, annualized growth levels are usually lower than an A grade in the same location. Well, they will be lower than an A grade in the same location. And, a little thing that I just noticed, the actual difference that you pay if you pay a premium for A grade that may be 5 or 10% over, that itself, the premium you pay doesn't compound, if that makes sense, in terms of it doesn't compound as a negative difference against your gain over time. It's just a one-off. Yes. And anyway, I've got to learn to articulate this, because literally as I'm in there just chomping these numbers, playing with these numbers, I'm like, ooh, look at that, and paying 5 or 10% over for an A grade asset over time compared to a B or C grade asset. So I'm actually plugging in and using real life case studies to demonstrate this. It's like, a lot of people come to a buyer's agent and say, I want you to get me a discount, right? And I'm like, actually, you want me to buy you an A grade property? Because I could overpay for an A grade property, not that I intend to, but I could, and you'll still be better off than if you got a discount on a B or a C grade.
Yeah, you absorb that premium as the property performs, and we all know property's a long game. So if you're in it for the long haul, you want to have the best performing you can.
Yeah. Anyway, I'm just playing around with the numbers to demonstrate this, and it's just a fascinating stuff. Anyway, do you have a property Dumbo for us?
I do indeed. And I think it's important not to follow the herd just off the back of what's popular. And I think COVID might show us that. We've seen a lot of people embracing, particular moves, whether it's moving up to Queensland or chasing a region. And I'm not suggesting that they won't continue to perform. And I'm very fond of quite a few regions. But do your own research and understand the drivers. Don't just blindly follow what's performing, because past performance doesn't always equate to future performance. And we saw a lot of values challenged by COVID. So a lot of personal, lifestyle values challenged. Some will bounce back and some won't. But it's really important to be clear on your strategy and don't just follow the herd.
Do you have an example for us?
I think chasing the region that's performed the hardest after the borders are opening up for the nearest capital cities could be a dangerous move. So, for example, if Byron's done really well and at the same time as Sydney's had some tough restrictions, well, I'm seeing it myself in Melbourne now that we're in recovery and our restrictions have almost completely gone. A lot of people have really embraced the city, and their love affair is burning again for the city. So I think it's important not to assume that the city won't bounce back. And if you've got a lifestyle there or work there, we can't just assume that the the differential in property performance that we've seen from regions versus our cities will continue to sustain, because people will return. They will have to come back to work. Not everyone, but a lot of people.
Yeah, I think there will be a bit of a U-turn, but that will maybe see that in the next year's survey, perhaps.
Yeah.
Look, thanks, Kate. Really appreciate your time. And we'll put the link in the show notes too for people who want to get a copy of that survey. And hopefully we'll talk to you again soon.
Thank you so much for this opportunity, and a special mention to the PTA crew. I know they worked very hard on this, and our very own Merit at REBAA. Veronica, thanks for the opportunity.
If you're looking to buy your dream home or an investment property in Sydney's inner west, eastern suburbs or North Shore, my team and I can help you buy without regrets. Reach out via my website, gooddeeds.com.au.
If you're looking to buy your first home, thinking of upgrading into a new one, or purchasing an investment property anywhere in Australia, my team would love to carefully guide you on this journey. And most importantly, get the finance right. Reach out via our website, wealthful.com.au.
Thanks for joining us. We'd love to see you again.
And remember, don't be a Dumbo.